Hey everyone, welcome back to the channel. Today we're diving into a topic that's super important, especially as you start thinking about managing your own money. Credit card defaults. You might have heard by now, more and more people are falling behind on their credit card payments. But what does this actually mean? Why does it matter anyway? And what could happen if this trend continues? Let's break it all down with the latest research and data. Before we jump into the numbers, let's make sure we all understand what we're talking about when we say credit card defaults. When you get a credit card, you're essentially borrowing money from a bank or a credit company that you promise to pay back later. Each month, you receive a bill that tells you how much you owe. Now, when you don't pay the entire amount right away, you can make what's called a minimum payment. But if you miss that minimum payment, your account is marked as delinquent. If you keep missing payments, usually for about 6 months or so, your account goes into default. Now, this is a huge deal because it means the lender doesn't expect you to pay back the debt without taking legal action. Defaults can severely damage your credit score, making it harder to get loans in the future, like a car loan or even a mortgage. But the impact doesn't stop with you. It also affects the banks, the economy, and even people who are still making their payments on time. Now let's get into what's happening recently. According to a May 2024 report from the St. Louis Fed, credit card debt and delinquencies have been steadily rising across the U.S. We're now seeing a delinquency rate at the highest level since the great financial crisis of 2008. The rise is partially due to inflation. When the prices for everyday goods like groceries, gas, and rent go up, people have less money left over to pay off their credit cards. As a result, more and more people are falling behind on their payments. The New York Fed also reported in November 2023 that younger borrowers, particularly those in their 20s and 30s, are seeing the sharpest increases in delinquencies. This is concerning because these are the people who are just starting out in their careers, and a bad credit score can leave long-lasting effects on their financial futures. The report also pointed out that while delinquency rates are rising across all age groups, it's particularly bad among younger people. This is a generation that's already been dealing with student loans, high rents, and now rising prices for just about everything. So it's not surprising that many are struggling to keep up with their credit card payments. Now, let's shift gears and talk about the impact of the rising defaults on the lenders, the companies that issue credit cards. When someone defaults, the lender loses money. They might try to recover some of it by selling off the debt to a collections agency, but typically they only get a fraction of what was originally owed. Lenders use complex financial models to predict how many customers will default, and they set interest rates and fees accordingly, so that they're always making a profit, even if some of the people default. But when the defaults rise unexpectedly, those models don't work as well. According to a report from BAI in 2024, credit card and auto loan delinquencies have hit their highest levels in over a decade, and defaults might not even have peaked yet. This is putting a lot of pressure on the lenders, who are already dealing with the tighter profit margins due to the economic environment. As a result, lenders might become more and more cautious. They could start raising interest rates, making it harder for people to pay off their debt. Or they might even tighten their lending standards, making it more difficult for people to get a credit card in the first place. This could lead to a cycle where only those with excellent credit can get new loans, leaving others stuck with high interest debt that's hard to escape. So what happens to the economy when we see a significant rise in credit card defaults? Well, it's not just the banks that feel that pain. Everyone does. When lenders lose money, they lend less. If people can't borrow money as easily, they spend less. And when spending slows down, businesses earn less money, which can lead to layoffs and higher unemployment. This is particularly concerning given the current economic climate. The economy is already facing significant challenges, from high inflation to global uncertainty. Many of the leading economies in the world are already officially in recession. An increase in credit card defaults could be like adding fuel to the fire, leading to a broader economic slowdown. Think about it this way. If people stop spending money because they're too focused on paying down debt, businesses, especially small businesses, will suffer. They might have to cut hours, lay off employees, or even close their doors. This can lead to a domino effect, where reduced spending in one area leads to economic pain in another, and in extreme cases, this can even contribute to a recession. But what happens if credit card defaults get too high? If we reach a point where defaults are happening at a much higher rate, it could trigger a credit crunch. A credit crunch occurs when lenders become so concerned about the risk of defaulting that they drastically cut back on lending. This can make it much harder for people and businesses to borrow money. Without access to credit, businesses might not be able to invest in new projects or hire workers. And consumers might not be able to make big purchases, like buying a car or a home. If this happens on a large scale, it could slow down the entire economy In the worst case scenario, a wave of defaults could lead to a financial crisis, similar to what we saw in 2008. While we're not there yet, it's important to understand the risks and why financial responsibility is more important than ever. So what can we do to avoid the worst case scenario? For individuals, it's about being smart with your money. This means using credit cards responsibly, only charging what you can afford to pay off each month, keeping track of your spending, and making payments on time. If you're already struggling with debt, don't be afraid to seek help. There are nonprofit credit counseling agencies that can help you create a plan and get back on track. For lenders and policymakers, it might mean tightening up lending standards to ensure people don't take on more debt than they can handle. It could also mean providing more financial education to help people understand the risks of credit card debt and how to manage it responsibly. To wrap things up, credit card defaults are a big deal, and they can affect not just the people who owe the money, but also the companies that lend it, and even the entire economy. The key takeaway here is that financial responsibility is crucial, and not just for you, but for the economy as a whole. If you found this video helpful, please like, subscribe, and leave a comment below and tell me what you think. I'll see you next time.